All right, let's talk about one of the biggest stories happening in tech and finance right now. It's this absolute tidal wave of spending on artificial intelligence. And look, we're not talking about hype here or some far off prediction. We're talking about hundreds of billions of dollars in real, verified cash that is completely changing the game. Let's dive right in. Just take a look at this number, $423 billion. That is the confirmed amount that the world's biggest tech companies are set to spend on AI infrastructure in 2025. Just 2025 alone. To put that into perspective, that's more than the entire GDP of a country like Colombia. It's a truly staggering figure, and it tells you everything you need to know about where the money is flowing right now. Now, you might be asking, where does a number like that even come from? Well, it comes from something called capital expenditure, or CAPEX for short. For any beginner investors out there, this is super important. CAPEX is the money a company spends on physical stuff, things like data centers, servers, all that heavy-duty tech. It's not the marketing budget or salaries. No, this is the hard cash being used to build the actual foundation of our AI future. Honestly, understanding CAPEX is like having a map that shows you exactly where a company is placing its biggest, most serious bets. So where is this monumental number actually coming from? Let's look at the verifiable data, confirmed directly by the companies that are doing all the spending. Okay, so the vast majority of this $423 billion figure, it's coming from the giants, Microsoft, Amazon, Google, and Meta. During their public earnings calls and in their official filings, they have all spelled out exactly how much they plan to invest in building out their AI capabilities. These aren't just wishful thinking or some aspirational goals. These are concrete financial plans that they've shared with their investors. They are, quite literally, putting their money where their mouth is. And here's where it gets really interesting. As massive as 2025 is shaping up to be, all the signals suggest it's not the peak. It's actually just the beginning of an even steeper climb. Let's take a look at the data for 2026. What's really crucial to see here is the acceleration. We've got the confirmed $423 billion for 2025, but based on what these companies are saying and what analysts at places like Morgan Stanley and UBS are forecasting, the projection for 2026 is already blowing past $571 billion. This isn't just steady growth, you see. It's rapid acceleration. It shows that these companies are seeing results and they're doubling down on their investments at an even faster rate. And hey, don't just take my word for it. This quote right here, it reflects the exact kind of language that leadership at these companies are using. They are explicitly telling the market to expect notably larger spending. I mean, both Amazon and Microsoft have signaled that their 2026 spending is going to grow even faster than 2025's. It's a crystal clear, forward-looking statement of intent. And this is so important. This entire analysis is grounded in real, publicly available data. We're not just chasing headlines here. We're looking at company earnings calls, we're looking at SEC filings, and we're cross-referencing all of that with projections from major financial institutions. For anyone who really wants to understand this trend, these are the primary sources you can use to separate the real signal from all the noise out there. So this all leads to the big question, right? The one that any investor should be asking. With hundreds of billions of dollars being spent, where is all that money actually going? Who are the direct beneficiaries of this incredible wave of spending? The simplest way to think about this is the classic gold rush analogy. During a gold rush, yeah, some people got rich looking for gold, but the people who made the most consistent money, they were the ones selling the picks and shovels. Well, in the modern AI gold rush we're in right now, the exact same principle applies. The clearest money trail leads right to the companies providing the essential tools and infrastructure. And this is what those modern-day shovels look like. First up, you've got GPUs, or graphics processing units. Just think of these as the powerful computer chips that are the brains of any AI model. They do the trillions of calculations needed to get these things to work. Second, all those brains generate a crazy amount of heat, which makes industrial-scale data center cooling systems absolutely critical. You just can't have the brains without the AC. And finally, you have the cloud providers. They're basically renting out the digital land and the pre-built infrastructure that you need to run AI on. This is where that $423 billion is going. So how can a beginner investor make sense of all this and get ready for what's coming next? Now, this isn't about giving you stock tips. It's about a framework for thinking, a data-driven playbook for navigating this next wave. Here are 4 key lessons we can pull from all this data. First, follow the verified CapEx. Pay attention to what companies say they are actually spending in their official guidance, not just the media hype or some splashy product announcement. The real money trail starts with that committed cash. Second, position in the infrastructure. Think about those shovel makers we talked about, the ones who are the direct recipients of that spending. If you follow the cash, it leads you straight to the foundational layer of the industry. Third, and this one is so critical, be patient. A huge structural trend like this is going to have ups and downs. Markets get volatile and sentiment can swing all over the place. But the underlying multi-year spending trend, that's the signal to focus on through all the noise. And fourth, use the tools. You can track this stuff yourself. Public earnings call transcripts, SEC filings, investor relations websites, these are all free resources you can use to monitor these announcements as they happen. So the key takeaway is this. A massive multi-year investment cycle in AI infrastructure isn't some future prediction. It's already happening right now, and it's accelerating. The numbers are verified, the company guidance is clear, and the trend is set. So that really just leaves us with one final question to think about. Knowing all this, are you prepared for what comes next?